So, hello everyone. We're discussing today's fundraising pitfalls. And today on the panel we have Ray from Gumi Cryptos, we have Alan from Fabric Ventures, we have Joyce from Animoca Brands, and Ani from Dragonfly. So I wanted to start with an opening question, because I'm sure we don't need a round of introductions. And a lot of startups are struggling when it comes to fundraising. They're struggling how to time their round, how to find the right VC. And I wanted to ask, what type of things you're paying attention to when it comes to elevator pitch? So if you meet startup at the event, what is the one thing that grabs your attention? What startup can mention? Is it a team? Is it a project? And would love to start with Ray.
Sure. Okay. So I think it depends on which stage you are. If obviously, if you're in a, like us, we mainly invest in pre-seed and seed stage. So for us, there's basically two parts very important. One is the team. Who are you? What are your past experience? What kind of the skill set that you and your, the founders, the core teams actually have. And then what's the actually business or product that you're offering to the market. So basically, we want to see you're working on a product that has a huge market demand, and your team is the perfect background working on that. So that's kind of a very short answer to it.
Yeah, you mean in such an event like
yeah.
Okay.
During Paris, maybe.
I think the first question I would ask is just tell me about the business, and then a natural next question would be, are you raising now? Have you raised? Will you raise? So just to get an understanding of what the ask is. Is it just for us to get to know them, or they're actually going to be pitching a fundraise? And of course, the team comes, but we don't have that much time, so it's very difficult to assess the team in a setting like this one in 1 minute between two panels. So that would have to come later, I guess.
I would go for what the product is, what is the target audience, the user, and why are you better than the best-known competitor in this space?
Yeah, I think for me, I would actually not ask anything about the business. I would just ask them about their backstory. And I think with a lot of the founders that we back, they're all very weird people in exceptional ways. So yeah, you don't find normal people building exceptional businesses in crypto. I don't think that's like a thing. So I wouldn't ask anything about the business.
And I want to stay with you for a little bit, and I want to ask, what are some key mistakes that founders make when they're pitching to investor?
Yeah, there's three that I notice most of the time. So the three-step process that we tell our founders is, so prepare very well, like set clear KPIs, and then just don't waste time, because raising in some sense is a lot like dating, where a lot of people kind of waste your time, and you just want to cut that as soon as possible. So it's like, if you know, right? And if you're getting doubts, then the medium is the message, so to speak. So yeah, don't waste time.
And Joyce, what do you think from a red flags perspectives from founders? What can be a red flags for founders are looking for investors?
So red flags that we look out for in a way.
Yeah, so if, for example, they're in communication with investor, what can be a red flag that they shouldn't proceed with this investor as well?
I think in some way is how open the communication is around challenges and also around competition. Because I think it takes a lot for you to build heads down building for sure. But there is also a lot of questions that usually come around is how competitive you are. And then when people are bringing up those challenges, then how much do you actually open to receive those feedback and take that into consideration?
Ideally, in sort of fast-moving settings like these ones, what I've noticed, a lot of founders are actually delivering a lot of information very quickly, and you kind of get confused as to what the business is, who they are, where they come from, are they raising, not raising. So I think I would advise founders to be very precise and concise. Just pick 2-3 things they want to actually say, and don't talk too much, and then get a reaction from guys and girls like us first before delivering the next set of messages. This is just basically practical stuff. I think the other thing that a lot of VCs would love to see, but I know it's very hard from a founder's perspective, is to when you scan a portfolio, which are all public in our respective websites, just to say that you don't have anything like this in your portfolio. I mean, we have a portfolio of about 83 companies, I believe. And one of the things that it's in the back of your mind when you do early stage deals is, am I talking to somebody who's pitching me something that we've already invested in, like heavily in that sector, or we backing a specific company in that sector? So doing a bit of homework is always good to say, hey, you have nobody like us in your portfolio, and we fit in that particular category.
And Fabric is also organizing a lot of events, especially during ECC week. Do you use it as a strategy to get more deal flows, meet more founders, and how does it work from a fundraising perspective, like looking for startups?
These kinds of events?
Yeah.
It's okay from a fund's perspective. It's about notoriety. You want to be seen and participate in some of the interesting panels and discussions, and also hackathons and so on. Because as a fund, particularly in Web3, you have to be part of the community in a big way. And if you're not part of this community today and tomorrow, the whole week here in Paris, for example, I don't think you're legitimate for Web3. So it's important for a fund to be here from that perspective. Getting deal flow is kind of difficult because you have a lot of people talking to you, but surely sometimes we find some interesting companies to follow up on, but it's very hard. So you have to. I think the startups have to follow on afterwards, get the emails, get the contacts, just be persistent in following up.
So it's interesting actually about persistence, and during this time I noticed that there are a lot of startups that had to do bridge rounds because they either failed to fundraise their total amount during a seed round, because we went into bear market. And Ray, I want to ask you, what do you think about bridge rounds when startups are pitching to you and they're doing a bridge round? Is it a red flag? Is it totally fine? What do you feel about that?
Yeah, so bridge round itself doesn't have to be a red flag. So it depends on what you actually achieved from your last round. So if you, when you do the last round, you proposed kind of a milestone for the next round is, let's say, A, and you almost there, but because of the market change, for example, the traction doesn't go as well as you expected, but you show, although it's originally you expected, let's say, 50% growth, now it's only 30% or slightly slower than that. But you're showing the traction from the investor point of view. I can tell that if the market is starting to recover, this product will definitely, their service, the business will definitely grow again. Then I think I'm totally fine to keep investing in that company. But obviously, we do a bridge round rather than a new up round, pricing round, because it's not, the valuation is not be able to justify for a proper up round. Then call it bridge round is totally fine for us. Obviously, on the other side, if you are doing a bridge round because nothing being achieved since the previous round, the market direction change, absolutely crashed your business model or your services, then that business needs to be pivoted, and then whether you call it a bridge round or a restructuring round, then that's a different story.
You sure you want to call it bridge round? That's a question to the founders. I would not call these a bridge round. I think it's still tainted a little bit, the word. I mean, in practice, you're right. I mean, it's okay to invest in a company which is bridging, but as an opening shot, I don't think I would use the word bridge round. I would say we're doing an extension to the previous round. We have great traction, and that justifies getting more fuel for the business right now, and we're doing it in a way that we're not raising so much because we want to prove these 2 or 3 things, or we want to achieve these 2 or 3 milestones. Then we will raise more in 18 months of that kind of stuff. I personally would avoid the word bridge, because sometimes investors think bridge to nowhere.
It's actually a really, really interesting point. So it's extension. It's around extension. And Ani, I also wanted to ask you when startups are looking for investors and they're trying to come up with a strategy, what kind of things they should pay attention to when they structure the initial contact list? What type of investors they want to look for? Or what can help them to optimize this process and not just doing a cold reach out to like a bunch of investors?
Yeah, the best way I would frame that, I think, is start at the end and then work backwards, because in the best case, you're going to be doing this for a decade. So like the biggest kind of modalities of failure that we see is that people pick investors just off the brand name, and then that's always a bad sign, right? Because like you'll end up calling somebody at 5 a.m. that you just really dislike. And we say that a lot with people like in our various networks of like, how do you actually solve that? Because once the money is wired, it's wired, and you can't really do anything beyond that. So I would spend a lot of time before just taking in capital. Now it's quite hard because we're talking about bridge rounds, we're talking about like people dying, but like you really have to think about like, who do I want to be talking to every day? Like, what type of networks do I want to get access to? So Fabric, is really good at, let's say, like European exposure, right? So if you're going to spend a lot of time in Europe, you should work with someone like Fabric, Animoca and gaming, right? And so that's kind of the second level. And then at the fundamental level, it's like you and the partner that you work with. And like you both have to get along extremely well. Otherwise, it's no dice.
To add on to that point about what you've mentioned doing the homework, it's to identify the gap in the portfolio, but also synergies within the portfolio, because it would provide so much more conviction, or at least the initial interest. If you say, if I invest in this company, I could see I introduce them to a dozen of other companies in my portfolio, and this is how I believe I can create value. So that would help in that case to think ahead what you actually want to get out of that particular investor too.
Yeah, so think about what your target is to getting money from the investors, and you want to talk to someone that can easily understand what you're talking about. So obviously you don't want to pitch to a investor focusing, mainly investing in, let's say B2B, pitching them a B2C service, right? So you should do your homework, understand what type of business companies, protocols these investors mainly investing in. So understand, okay, they will understand my words. If I telling them my thoughts, my vision, my product, they will easily understand it and make a decision fairly quick. If you're talking to someone that doesn't understand it, then that's probably a waste of time.
Yeah, let me just quickly add to that, which is that a lot of people don't want to hear this, but startups are mostly a branding exercise. Everyone needs technology, but for the most part in crypto, technology is not what creates the $100 billion outcome, like the $10 billion outcome. A lot of it is distribution. And VCs at the end of the day are kind of selling capital, which is a commodity product. And so generally speaking, like this is not true for every VC, but like in 99% of cases, you're kind of optimizing distribution and then like the kind of technical, high octane insight that they give you.
And I like also talking to VCs because when, for example, I work with founders, they go to VCs and they get completely different feedback. It's sometimes absolutely contradictory. And I wanted to ask a few questions related to it. So one question is about how much to raise. Of course, I've seen founders who are coming to VCs and saying, okay, we're raising 1 million. And they're saying, no, go straight for 5 million. You need 5 million now. Or some VCs saying, no, 1 million is crazy. You have to ask for 100K, show, I don't know, maybe more traction and go for the next round. So how do you think startups can actually make a decision on how much to raise during, especially seed round?
I don't think they should ask the VCs first. That's for sure. I think they should. By the way, I'm an entrepreneur myself, right? I think that they should really have a clear sense of how much they need to get to the next stage. Because at the end, the VC will figure out if your plan is credible or not credible. So you can be credible with 500,000, you can be credible with 5 million, or you could be credible with 10 million or 100 million. The credibility factor is the most important thing. If you're shooting a big number because you think you need effectively runway, then the VCs will smell that. They will see it in your plans. You know, the minute they start to dig into your numbers, your revenues, your projected revenues, and so on. So you're not raising to just basically give you security. You're raising to get to a certain milestone that makes sense from a valuation standpoint. So I think the credibility factor of your plan is the most important. So backed by, okay, use of funds. Why am I raising 5 million? Bang, bang, bang. That's the way to do it. And I think the VCs will take a lot of comfort from that. And you shouldn't be asking a VC how much you should be raising. Now, if the VC says, why are you raising 5 and not 6? That's fine. But if the VC says, why are you raising 5 and not 1? It's because they don't believe that your plan is credible, given where you are now. It may be credible in 2 years, but not now.
And what to do if, for example, VCs are saying to you, oh, we don't think it's a right fit for a moment, but we would like to stay in touch?
That's a classic one from VCs, right?
Is there a way out from this? Is there a way out? Or is it a definite no?
Usually, I don't know, I'll ask my colleague. I mean, usually when the VC says that, it's because they went through a process involving a team, and it's difficult to backtrack from that, unless you come up with a piece of news that is like incredible, that wasn't part of the due diligence process. You say, well, actually, we just signed whatever company, and then maybe they want to revisit. But usually it's a way, by the way, it's not a fake no, it's a no for today. The VC says, we want to keep in touch for the future. It's not necessarily bullshit. They want to keep in touch for the future, right? But it may not be right at that time because the comfort level isn't there. It is what it is.
I'm curious to hear if Ani or Joyce or Ray, if you had an example of a project that you firstly weren't sure about and you said, we want to stay in touch, but then you actually jumped on the next round or maybe the extension round.
Yeah, I'm happy to start with. So normally a VC will, for example, us, we focus on pre-seed and C. Sometimes we go early A. So there's a range. So sometimes when we talk to startups at pre-seed round, it really have nothing, and we're not sure about the market timing of the product, whether the execution will be good enough. We're not confident about the team at that moment. So we tell them we like to keep in touch in monitoring how you execute your business. And then when they go to the next round, we see the actual execution. We have more evidence to give us the confidence this will be a perfect a potentially successful business, so we can pull a trigger at the next round. So in our portfolio, Vega protocol is one of the DeFi protocol that we talked to at very early when they actually cold outreach us through this open email. We talked to them. We think it's a pretty cool concept, but it's nothing really proof that they will be able to deliver that. So we tell them, we like to see you execute it. And then when they do the next round, we actually talked again, and we realized it's more that all the past concerns actually, kind of solved, and then we decided to invest in the new round. So that's a perfect example for this.
I'm thinking that most of the cases, if people are saying no or not yet, then they're still opening the door, right? So they're not closing the door. And I don't think that is necessarily the worst answer that you would receive. So I think it's actually, I would take that as a bit more positive sign and then say, oh, this is just a fake answer. Because if they really don't want to engage with you, they could ghost you. Everyone who have been on a dating app will understand this. If they actually give you a no or not yet, I think it's not the worst sign.
Yeah, I can agree with that. I think the only way to possibly disprove the point would be you just have to succeed, right? I mean, that's like no amount of VC money will like kind of make you succeed or not. It's like success is kind of the only outcome here. So in that sense, startups are kind of binary where like even if the VC tries to help you or whatever, it's like you still have to do the hard work yourself. But you were asking about were there any companies I think that we had originally passed on and changed our mind about. So I don't think I can speak to the company, but we've had various sectors in crypto that we were very unsure about if there was any value capture here, or any big businesses kind of emerge like out of the sector. And there have been a few times we almost passed, and then we were like, wow, we're just being idiots here, and switch our mind at the last second. But the founder would have succeeded without us, so it wasn't like our choice. It was just very clear like we were looking at it wrong, and I think it's like the mark of an educated mind to be able to change your mind very quickly. So.
It's like I was trying to get some statistics to understand if it's actually an open door or it's a hard no. And one of the last questions that I want to ask is about our pitch deck. When startups are sending their pitch deck, and I can't even imagine how your mailbox look like. So I saw that VCs are looking at the pitch decks under 1 minute. And firstly, what is something that startups adding to our presentation that will make you close a pitch deck right away?
Did you mean reading the pitch deck or being delivered the pitch?
No, when they're sending you a pitch deck and maybe sending you a blurb, what can be a one point item that will make you close the pitch deck right away and you don't want to talk and deal with this startup? And if it's a hard question right now, I can also ask another one, is what would be the driving points that will actually grab your attention and will make you to reply to the startup? So maybe you can start with this one, and while you're answering, you can think about something, maybe a specific example of a project that reached out to you and you were, oh no, like I can't deal with it, maybe too much text, unclear information, or something like that.
Like a long-winded email plus a link and so on. It's for me wouldn't do the trick so much. But a short paragraph on an email or a Telegram message, if they manage to figure out who is who, with traction. Okay, what the business does, traction numbers. Some customers, whatever, anything that shows where you are in the journey from a commercial standpoint, and also information about the raise. And then, of course, there can be a pitch deck attached, but that would grab my attention in the sense of, okay, it can fit, because we are early stage funds, right? So if this is not something which is too late stage, you will qualify right away. What is off-putting is that when you have to read a whole pitch deck to figure out that it's completely outside your remit. So make it easy, I'd say, with short information. And of course, in terms of the practicalities of opening the pitch deck, if the design is awful, then you probably don't want to engage. That's me, it's very personal. But if there's no thought and love put into your pitch deck with bad design, I'm not so sure.
So you touched also on the design. It's a follow-up question to that, because I hear contradictive feedback on that. Some VCs saying, don't spend too much on design, but want to see that you're actually spending time on the project, but not designing the deck. And some VCs also are looking for a better design. So I'm curious also to hear from everyone else.
So, I mean, from the entry point, in the email, first, definitely a short paragraph explaining what's the problem and what's our product, right? Without that, nobody's gonna read the rest. And don't make it too long, because it's just too much. And second, just put your deck in there. A lot of the entrepreneurs send an email telling us, here's what we're doing. If you're interested, we'll send you the materials. No, put it in. If we're interested in it, we're going to read it immediately. We won't really reply and ask you to send us and do that. That's kind of a back and forth. It's just a waste of time. And then look at when getting the deck, also make it short. You can make a longer explanation when we talk on the phone or over Zoom, whatever. But make sure you explain the point very clear. What's the problem? What's our product? Why we're win? What's the team? That's it. No, do not make it kind of too sophisticated and telling us, the big picture without telling us the detail. That's kind of how I will look at it.
I agree, and I think most of the time it is if you think from the other end's angle, you have a lot of information to process every day. How can you help them process that in the most efficient way? If coming from that angle, I think you would write a short email with the key bullet points. You would not spend maybe 50 pages with a lot of graphic design unnecessarily, while people would say, actually, I want this few particular information. And I think ultimately one more thing I would add is I would love to see more understanding of where the market stands today, instead of saying that I have this baby that I really want to show you, but you don't really go around and look at other people's babies as well. Because that makes the person's life much harder for them to understand what is the market you're playing in, which are the competitors you have, for them to even have a starting point to assess this opportunity.
Yeah, I think when VCs look at decks, the three big things they're looking for is there a synergy between the team, the market, and the product? And if one of those things are off in the beginning, then I think people get the ick very fast. Because you have to imagine, like, people do this job 18 hours a day, right? Like, they just kind of know what's going on. And I would make sure to get that right. And on the design point, it's kind of interesting because on first glance it shouldn't matter, but then we find that how people do one thing is typically how they do everything else. Will they send updates frequently? Will they be responsive via email, via text? All those things kind of merge together into the same person, where it's like, if people do the deck bad, generally we find they're very hard to get in contact with, and these things escalate as the business gets bigger and bigger. So.
And Ani, if you get a long email, will you actually read it?
I might. I don't know. Could be a good day. Who knows?
And also,
if it's well written, maybe.
If it's really, really long. To wrap up the session, I want also you to share one red flag that can be determining point to end conversation with the founder. One red flag: arrogant founders, mass information, lack of traction. If you choose one red flag that immediately stops the conversation.
For me, it would be lack of integrity, because I don't think there's anything that solves that. So Buffett had this line, which is, people might be very hardworking, they might be very intelligent, but then without integrity, there's no point continuing the conversation, right? Because you can't really fix that in people, and that's sort of an absorption barrier where, what do you do beyond that? There's not much you can solve. So.
I think it's if there is any mentions of not treating the team well, because I think it's very important to build a good team for a good startup, and if you're not treating your people well, then it decreases your chance of success.
I'm just going to focus on, again, settings and conferences, and because this is the hardest thing when you pitch to investors and you don't know them and they don't know you. I go back to what I said before. You have to be extremely precise and deliver a very small amount of information that matters in a short amount of time, and then make sure that the people, the VC, whoever they are, grab your attention. You grab their attention with this information. So the red flag is to do the opposite of that, which you swamp me with a lot of information, and it's like. It's just be very precise.
100% integrity, definitely most important. So the founders have to be transparent and honest. I don't want to talk to someone that keep trying to hide things from me, and basically, I think that's kind of give me a hint how I'm going to communicate with this entrepreneur after our investment or from now on, right? If every time I talk to this guy, I always struggling to get information out of it, that's just never will work.
Thank you so much for your time, and I wish we had more time. I would invite all of you to join the podcast later because I want to ask a lot more in-depth questions. But thank you so much for spending time today and joining our Startup Day.
Thank you.